this Wednesday afternoon, technically speaking, is going to be more so that of a transitional video as we move into Thursday's session of trade. A few things to update you on, really off from where I left you on Tuesday. One important piece of analysis is the simple fact that yes, we did see the follow through. The follow through happened. As at Tuesday, we saw once again, as at yesterday, the reversal take place right at this open support. This is exactly what we were speaking about as at Tuesday. And you can see here on the NASDAQ, we closed up just over 83 points. So again, what's important to point out is that one, we've seen the back test, the close of this open window. Two is that we have seen a very quick response off from the opening of this window. And two or three, we have this long lower wick. So the NASDAQ itself, it has more or less gone through that of the closing of the windows. The problem becomes that the markets themselves are a little bit bifurcated. And let me just show you what I mean by that. We started to sort of touch on this as at Tuesday's video. However, if I zoom on over, at least I'll go into the S&P 500 first of all, you can see that we actually flinch below that of Tuesday's candlestick just here. This is Wednesday's candle. You can see that we do have a slightly lower wick. However, once again, we haven't really definitively closed below, or at least closing below that of the open gap support, nor have we really seen any continuation stemming from the sell-off that we saw on Tuesday. In fact, we closed up 18 points yesterday. So again, a very quick reversal. It's not happening off the full gap closure of this area here, nor have we actually gone through the traditional area of, I guess, confluence of support between that of the sort of traditional resistance turn support and also, of course, that rising 100-day simple moving average. You can see here on my screen on the S&P 500. More importantly is if I switch on over into the NASDAQ, you can see this very quickly. This is still technically that of the blending area of support, but it wouldn't surprise me again to still see a little bit of negative headwind short term, whereby we see the industrial average again begin to sort of toy with or play with that 26,750 area. Maybe it happens today as at Thursday. Maybe it happens on Friday, but essentially we're still in no man's land at the moment. Yes, the markets are doing everything in their power, so to speak, to actually set up that of a short-term little double top here. I wouldn't call it a double top, but I'm just sort of doing it to help at least the explanation or the illustration of the pattern that we're looking at. But again, most importantly, on the Dow Jones Industrial Average, it is probably, you could say, the stronger of the three markets at the moment, given, of course, that we haven't even come on back down to this open gap support at the moment. You still have to be mindful, again, that the markets could very much so, or very well so, especially on the Dow Jones and the S&P 500, do such a thing. The NASDAQ itself has run through that. At least it's jumped through the hoops at the moment, and you're already starting to see that initial reaction off from that area. Pay attention. Traditional resistance turn traditional support, the gap support, and also, again, those rising 100-day simple moving averages collectively across the board on the markets. I still expect the markets themselves to continue to pull back, especially in terms of the industrial average and the S&P 500. The NASDAQ more or less can tread water. It'd be interesting to see a little bit of a sort of a bifurcated state in the market, or at least a chasm between potentially that of the NASDAQ more or less holding its ground or moving sideways, just simply marking time, and to actually see intra-session weakness on the S&P 500 and also the Dow Jones Industrial Average. You could very well see that of a long lower wick develop, sort of a mini flash crash, so to speak, intra-session over the next coming two sessions. Time will tell. We'll obviously keep you updated as this unravels. But again, gap support is still holding. The markets are holding in there quite well. They are very close to, of course, their new, or at least their past anyway, in the month of July, all-time highs. Got very close during the period a couple of weeks ago in the month of September, obviously. And as such, we're sort of just marking time and sort of expecting these markets largely to pull on back down. So again, I wouldn't be jumping aggressively, so to speak, into market positions at the moment. You can, of course, do whatever you choose to do. However, I do believe still that we are going to see lower prices. It is going to be very much so short term before we see these markets actively bounce off from, of course, their handles, their respective support areas that essentially we built during the entirety of August as we developed that of this resistance area, right, which kept the market below, of course, some of these strategic entry points, these pivot points that we've been talking about here in these afternoon market recaps. Now, very quickly, I just wanted to point out that we saw a big jump yesterday in the US dollar, okay? Up 70 cents on the index, but closing above 99. Again, we've been following along with the dollar. We haven't really been actively trading it, but what we do understand, again, is that a trend is assumed to be in effect until it gives us those definitive signals that it has reversed. And the reason I'm going through this is because even though we have been somewhat in that of a consolidation from really 2015 onwards through to really the current juncture, you could pretty much draw that of a rectangle around this area. Yes, we have sort of poked our head up above it, and yes, we have poked our sort of head down below it as well. We're still holding above that of the primary bullish macro trend, and as such, it shouldn't be a surprise that the US dollar continues to rise. You should look and follow along and watch this to move closer towards that 100 handle. Yes, we still have 1 cent to move, so to speak, on the US dollar index itself. But the reason why I'm going through this is because we found an interesting parallel. If I go back far enough, I know the chart becomes somewhat distorted. There's lines all over my screen. Sorry, my apologies for that. But don't necessarily focus on this. This goes back to 1984. Again, what you can see is a series of lower highs, and this is strategically marking that of what I believe to be that of a descending channel, right? You can see that moving lower over time. If we're trading at 99 and our projection up here is just shy of 112, to me it seems as though potentially we could see the US dollar continue to appreciate over 12% over the next coming years. And also, if you wanted to overlay this with another interesting parallel, pay attention to the last time that the US dollar, or at least the index itself, rallied up until this resistance point. This essentially marked the top of the US equity markets and the dot-com bubble back in the year 2000. So again, it makes sense in terms of the sort of the late stage cycle of this macro time frame that we're operating in, whereby again, this could be another form of analysis. Sure, it's not fundamental, I understand that, but just sort of a, you know how history sometimes it doesn't necessarily repeat identically, but it does rhyme, so to say. Well, that is exactly what I'm, have picked up on, not only recently, but we've been speaking about this for a number of months now. But it makes sense if we do see the dollar break out above 100 and even breaking above 103, that this can just rocket essentially over the next 1 to 2 years up to 112. We'll obviously pay attention to this if it chooses to do so. The reason why we're speaking about the US dollar now is because people have requested videos and analysis on GLD and also SLV. And here's the chart of GLD. First of all, this red box, what is it? This is what we call sort of that radioactive zone, whereby we don't want to be essentially buying or doing really anything in these sort of strategic boxes. The reason for that is if I zoom out and show you this is essentially that of the support area, which has now turned resistance just below that 150 handle on the ETF itself. So again, we're coming back up to retest what was once support in the year 2010, but prior to that it was resistance, but then support, and then of course support towards the back end of 2010, and also really for the majority of 2011 until we definitively broke down below it in the year 2013. I should have moved those dates 1 year forward. My apologies for that. The interesting thing about this at the moment is that, again, the commodities themselves, they're priced in US dollars. So if we're expecting the US dollar to potentially, again, continue to appreciate up to that 110 handle, which is the resistance area on that downward sloping channel, right? We're at 99 at the moment, but we could see it up as high or just shy of about 112 potentially. Well, that means that if commodities, of course, are priced in US dollars and the US dollar is appreciating in value, it's going to remain that of a headwind for commodities. So as we have seen this cyclical sort of stealth bull market, or at least appreciation in the US dollar index, not really sort of countering in that of the past, say, 3 months of GLD. It has been, and commodities have been, relatively sleepy. If I go back and show you this, I might bring it out to a monthly chart. Essentially what we've done really since 2012 is really moved sideways up until 3 months ago. And again, this could be the back test on an intermediate time frame of this support area over here, turned resistance, whereby when you think about the current price and the dynamic of GLD and also SLV, it makes sense that this could be potentially that of an intermediate top. This would be that of a true sort of double top, unlike the equity markets where I was just sort of briefly tagging on the illustration of a double top. But what makes this more important also is that we may have just established that of the secondary lower high, and also, if you wanted to call it, depending on the time frame of the pattern itself, we could be moving into that of a descending triangle, whereby generally speaking, 60% of the time we will see price action actually break to the downside. 40% we should, the other sort of instance anyway, is that we get above the resistance area. But if I were to sort of set triggers on this trade, I'd be placing it right below the support area here at about 138.77, and I think it may surprise a lot of people, especially if the US dollar really takes off after this consolidation. It's been in a multi-year consolidation. Yes, we have been creeping higher, but I think it would surprise a lot of people to see potentially the GLD ETF. I know this is probably not what people want to hear, but hey, this is, in theory anyways, neutral analysis or non-directionally biased as possible when I'm just interpreting the charts themselves. But it'll make a lot of sense to see GLD come down to say 128 if the US dollar does break out over the coming weeks or months. And also for silver, have a look at this. You've got that secondary lower high and also the gap fill, which may very well be that of an exhaustion gap that we saw play out between that of Monday and also Friday and Monday session that we've just seen or just gone through. So some interesting signals here in the commodities world, especially in the US dollar. It's very rare to see a day like this, but at the same time, we've been sort of haphazardly sort of just dancing around this area for quite some time. We're still yet to see that definitive breakout, but potentially this is it. And if it is, it's going to be significant headwinds when it comes to the pricing of commodities as well. So think about that when it comes to the market sort of setup. All right, I hope I've been as clear as possible. A lot of what we spoke about on Tuesday anyway is really playing out, especially during that of Tuesday session. Let me just get my days right. Tuesday and Wednesday session, whereby we saw the intra-session reversal take place yesterday. Okay, that's critical at the moment, but at the same time, there is still ample room for a decent percentage decline in the Dow Jones Industrial Average, again, to come on back down and to retest this confluence of support from the rising, the gap fill, and the traditional resistance turn support, whereby it would really set up a very genuine opportunity to re-enter into the market, and also, more importantly, our top 12 individual trade list. But we'll see what happens. We'll see what happens on Thursday. It wouldn't surprise me if it was weak. But again, that's just my 2 cents on the market as at the close on Wednesday. All right, so I hope that's helped you. I hope you found that interesting. Anyway, if you want to learn more, have a look into that analysis class that I perform each and every Saturday, Pivot Point Pro. All right, only a couple of days away until then. All right, so everyone enjoy your Thursday. And look, I'll probably be back with you later on a Thursday afternoon to recap some of the market activity that took place. All right, all the best. James signing off on behalf of Pivot Point Trading. Farewell.